we've been referred to just our basic ETFs in innovation as a new asset class as well. That is, we're not a new asset class. These are equities. Bitcoin and digital assets, that's a new asset class. But now we have an investor that understands that volatility is part of what you need to expect. They are.
Hey guys, welcome back to Everyday Finance. In this video, Cathie Wood discusses Bitcoin and crypto, according to Cathie Wood. When considering your question, it's worth noting that Cathie Wood believes that if we examine the S&P 500, we can gain some insights. When examining the Nasdaq, it is important to consider the top performers in each category. Many companies have reached their current level of success due to their past achievements. The world is on the brink of major disruptions, and it's clear that the traditional world order is being challenged and is going to be disrupted, which is unlikely to happen. The place to go, though we've been grappling with this issue for a decade, encompasses Bitcoin, and we are offering assessing the risks associated with the new innovation. The way the world is going to function, and it's quite remarkable what has occurred, and it's rather fortunate that Cathie believes it to be the most significant misallocation of capital in history. Following the tech and telecom bust, and especially after 0809, there was a noticeable shift towards embracing risk. Concern for risk mitigation and its implications for the traditional approach, it's a global phenomenon. Allow her to approach her benchmark. Allow her to gain proximity to the S&P 500. Allow her to gain proximity to the Nasdaq. She has observed discussions among portfolio managers and professionals from other firms. It's absurd to invest based on whether Cathie should be 10 basis points above or below the benchmark. This approach lacks sound financial analysis and is simply ridiculous, and lots of things Cathie Wood discussed, so please watch the video to end, and share this video and subscribe our channel Everyday Finance. Thanks.
Well, I'd love to pipe in here a bit, because when you ask that question, where else would we go? I think what you're alluding to is, if you look at the S&P 500 and NASDAQ, and you look at what's at the top of each of those, the companies there they've hit that level because of past success. And if the world is going to be disrupted and, the traditional world order is going to be disintermediated, that's probably not the place to go. However, and we've been fighting this battle for 10 years, including Bitcoin, and we are providing exposures to the new innovation, the way the world is going to work. And what has happened, and it's unfortunate, I think it's the most massive misallocation of capital in history, is after the tech and telecom bust, and even more so after 0809, there was a move towards risk aversion or risk mitigation. And what did that mean to the traditional world? It meant, let me get close to my benchmark. Let me get close to the S&P 500. Let me get close to the NASDAQ. In fact, I've seen conversations among portfolio managers in other firms where, the benchmark is their bogey. And shall I be 10 basis points above on this name or 10 below? That's a ridiculous way to invest. It's absolutely ridiculous. You need to take a white sheet of paper and say, what is the world going to look like? Not what has happened and what does the world look like? And especially given how quickly these technologies are moving. And the great thing for ARK in terms of everything that we do, and I know it's true for 21 shares, but they only do digital assets. But the great thing for us is there is a new investor who understands and accepts this notion that volatility is part of the price you pay for this new asset class. And many we've been referred to just our basic ETFs in innovation as a new asset class as well. That is, we're not a new asset class. These are equities. Bitcoin and digital assets, that's a new asset class. But now we have an investor that understands that volatility is part of what you need to expect. I'm not saying they're comfortable with the downside volatility. They love the upside volatility. Volatility is a very good thing on the upside. So I think this whole space, this new asset class, is helping investors understand what we've been trying to communicate for the last 10 years through Bitcoin, of course, but also through these other innovation platforms.
As per Cathie Wood, a new investor who recognizes and embraces the idea that volatility is an inherent aspect of investing for this new asset class, and numerous referrals, we've been approached by our exploring basic ETFs in innovation as an emerging asset class, which is not entirely a new investment category. These are stocks. Bitcoin and digital assets are considered a novel form of investment class, but now we have an investor who recognizes that volatility is a natural component of what you should anticipate. They possess the skills and knowledge. She doesn't express a preference for the downside volatility, but she definitely favors the upside. Fluctuations in market conditions. Volatility can be quite beneficial when it works in our favor. Cathie believes that this emerging asset class, the space industry, holds great potential. Assisting investors in comprehending our intended message for over the past decade, she has been able to navigate the world of finance by exploring various innovative platforms, including Bitcoin. Let's back to the Cathie Wood interview.
And thank you for saying that, Ophelia. To me, it's astonishing. To me, this is back to the future. When I started in the business, I was in college, 1977. What ARK is doing now is what we were doing back then. We're trying to envision, how is the future going to evolve? And we were in 1977 talking about Hong Kong 1997, 20 years in the future. And that became a very productive conversation over time, right? We were ready for the handover and what might happen after that. We were ready for China integrating more into the global economy. Now I know that it's doing the opposite right now, but you have to think about the way the world is going to work, not the way that it has worked. And that is why our strategies, we feel, are fulfilling an unmet need. That's why I started ARK. And I think, and this Chris Berniske also did coin recently. The DeFi can sound intimidating to people, defiant and so forth. So he was saying, look, the way to help people understand what this is, as Ophelia just said, is this is the internet financial system. This is what the developers did not put in place in the late 80s, early 90s, as they were evolving the internet, because they never thought the financial services or commerce would take place on this thing that we're all using now. So I think stepping back and talking about it that way, and then also describing, how young people are behaving. Even the most seasoned investors out there, they have children or grandchildren, and they're looking at how they spend their time, and they know that more than half of their leisure time or discretionary time is spent online. And so this notion of social status moving online with these immutable digital assets is a thing. They're not doing it, but they see their children and grandchildren doing it. So if you kind of describe what's going on out there right now to people who just put it in context, and Ophelia is absolutely right. When you think about the internet, how much it has been built out over the past 30 years, that's kind of priming the pump. And now you're just putting this IFS in, this internet financial system with native currencies native to the internet, taking out the middlemen, bringing in more peer-to-peer. It begins to make a lot more sense to people who just wouldn't even think about it before.
According to Cathie Wood, the internet financial system lacks certain elements that developers failed to implement. During the late 80s and early 90s, there was a significant evolution happening with the internet. It was a time when people didn't anticipate the impact it would have. It appears that financial services or commerce would occur on the platform we are currently using. Cathie Wood seems to have some thoughts on this, taking a broader perspective and discussing it in that manner, as well as describing how young people are behaving. Even the most experienced investor out there may have children or grandchildren, and they are examining their time allocation and are aware that over half of their leisure time or time spent online is often dedicated to personal interests. While the concept of social status continues to evolve online, the use of these unchangeable digital assets may not be actively involved, but they observe their children and grandchildren taking on the task. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks.